What if the market already knew the outcome hours before the news broke? Not minutes, hours? And some people already got paid before you even saw the headline. This actually happened on polymarket during major events like elections and corporate decisions. In multiple cases, the odds didn't slowly move. They jumped from around 50% to over 70% hours before the official announcement, before media confirmation, before the public had any idea. That's not sentiment. That's money moving early. And then something even bigger happened. Law enforcement started watching. Authorities moved in on the platform's leadership, and they weren't just looking at betting activity. They were asking who knew first and how that information got into the market. At the same time, startups began building tools to track these odds in real time. They were looking for sudden shifts, looking for patterns, trying to detect leaks before they became public. Now you have two layers: the people trading on information and the people tracking the traders. This stopped being a niche market and started becoming infrastructure. Because the market discovered something simple. Information itself can be traded. Not stocks, not bonds, not commodities, information. And here's the uncomfortable truth. In the stock market, insider information is illegal. But in prediction markets, it is the advantage. If you know something early, you get paid. Now, think about what that means if someone inside a company knows something. A merger, a lawsuit, a regulatory decision. They don't need to buy the stock. They can bet on the outcome. And if they're right, they get paid without touching the equity market. So now the truth shows up somewhere else first. Before earnings, before filings, before headlines. Two markets are pricing the same reality at different speeds. The public market reacts after disclosure, while the prediction market reacts before it. And that gap is where the money is made. Now, here is the part that hits your portfolio if you are a retail investor. You are reading earnings, following news, and doing fundamental analysis. But by the time you see the headline, the move may already be over. The price is already adjusted, and the opportunity is already gone. Not because you're wrong, but because you were never early. And now it gets more dangerous. If a large bet pushes odds higher from 40% to 70%, other participants see it. Algorithms pick it up, funds start reacting, and now real capital starts moving. Into stocks, into bonds, into currencies. Before the news even hits, now the signal becomes influence. And this is where the system breaks. If the market believes the signal doesn't need to be true. It just needs to move first. Anyone with enough capital can push the odds, trigger the reaction, and move real markets. That's the reflexivity trap. The tail starts wagging the dog. And once that loop forms, it is very hard to stop. Now regulators are in a corner. If they shut this down, they kill a new form of price discovery. But if they allow it, they rebuild insider advantage in a new form. That's the shift happening right now. The market is starting to price reality before it is public. And once that happens, you don't go back. Because the edge is no longer analysis, it is access. This is Macro Pulse. Global Notes by JP. If you found this helpful, comment, like, share, and hit the bell. Because the next phase of this shift won't wait for the headline either.